All right, it's happening. This is another industry that I think a lot of people are thinking is far away, and yet it is right around the corner, kind of like tokenization. And it is something that I believe in many ways is undervalued, underexplored, and is ultimately a blue ocean that could lead to the next massive investment opportunity. We're going to talk about that on today's episode coming right up. What's going on, guys? Welcome into today's episode. As always, your host, Matty A. Something that I've been paying a lot of attention to, kind of just out of interest over the last few years, has been robotics. And almost nobody in real estate is talking about it yet. You know, it's kind of the Waymos and the Tesla taxi in the car industry. You've got Optimus in kind of the personal robot world, right? But like kind of still feels iRobot-ish, which honestly was a great movie, by the way. Who would have thought? I mean, I remember when people were like, oh, one day that, robots are going to be all over the world. And I'm like, that sounds fucking nuts, right? Well, it's here. I watched a recent interview with Elon Musk. He does one every couple of months, specifically around robotics. And just talking the way he does really makes me believe that when he says more robots are going to be on planet Earth than humans, I believe it. I think one, as long as, we don't have Dr. Evil overtake with AI, having robots enslave us as humans, which I don't think is going to happen. I'm going to err on the side of optimism there. I think it's going to create so much exciting opportunity and efficiency and profit. I mean, I think it's just going to enhance life in the world as we know it in so many ways across every industry you can think of, from, travel and hospitality and manufacturing and healthcare. And I mean, you name it. I really do believe in robotics. Now, as a real estate investor, I'm very interested in how can robotics create alpha for me and my assets. And I'm going to break down in today's episode, if you are, and this is whether you're an real estate investor or not, as an investor in general, I do believe that this is still such an undervalued, underlooked, underappreciated space right now because it's just not real, right? It's not really applicable to what we do on a day-to-day basis. But it's one of those things where it's going to be slow until it gets fast. And I think it's going to get fast, really fast here in the next few years. And so I think, having some exposure to some of these companies, again, not an industry that you're going to go all in on right now, right? I mean, there's just so many proven, practical industries, investment vehicles, and companies that, you'd be silly to turn away from. That being said, I think there are going to be some category kings that come out of this. There are going to be some 10, 20, 50, 100x type of, investment opportunities. So we got to pay attention to it, right? I mean, this is fun too. So we're going to dive into specifically right now, just from my own selfish research, some things that people aren't talking about in real estate. Robotics is hitting real estate from two directions at once right now. The, kind of construction and how buildings get built side. And we all know the issues with affordability and construction costs and labor and all that kind of stuff, right? To actually build something to make it be affordable enough for somebody to afford. And then on the other side of that is how they get run. How do, real estate assets operate? Because at the end of the day, the economic model of a real estate investment is significantly impacted, and the viability of it and the profitability of it is significantly impacted by how they get built and how they get ran. So we're going to dive into the data, the investment plays, and maybe some of the companies, if you're not planning on being in these spaces and using them in your world, that maybe you just want to pay attention to and follow along with. So let's just talk about what's happening right now, because it's happening like right now. So I'll give you an example. A company called Icon Technology. I don't know if you've heard of them. They're based out of Austin, Texas. You've probably seen something on your social media, your Instagram. They're printing 3D homes at scale right now. And they have delivered hundreds of houses. They've partnered with Lennar, one of the largest home builders in the country, I think in the world. Um, and one of the cool things that they have documented is their build costs are coming in 20 to 30% below traditional stick frame houses. Now, this is a really big deal. In an environment where construction cost inflation, especially post-COVID, has just gone astronomical, it has killed more deals than it has helped, right? Like the economic viability of these models have been hurt significantly for a variety of reasons and a variety of factors, but one of those is just the cost to construct them and to build them. And this is a really big deal for developers, especially in the world of affordability being at an all-time low, the shortages of homes that we need in order to supply to even get close to the black with the demand requirements and needs of our country right now. This is one great stepping stone that robotics can help alleviate some pressure that has mounted significantly in this particular space. And it's not just Icon. You've got the likes of another one, Skanska. They are piloting autonomous rebar tying robots from a company called Advanced Construction Robotics on commercial real estate projects. That's been a whole other issue on the commercial side is the cost to construct and build commercial properties. Same thing. It's really challenging right now to make the economics of a deal pencil, the amount of money and time and risk that is tied to building these things. If you can find any little bit of edge in alpha to save on costs to construct buildings right now, this is a really big deal, right? So when you extrapolate this across many different asset classes, or that's just rebar. I mean, when you think about cleaning windows or how to oversee and manage HVAC systems. I mean, there's so many different ways that I could tell you that robotics are going to save money for investments, for companies, for investors, to make these assets better, more functional, more efficient. It's a big deal. And again, in the world of capitalism that we live in, right, any little bit of alpha that you can create financially is something that can make an investor, a business, a company, an industry that much more successful, that much more profitable, and ultimately protect it, build a moat around it. I mean, this example of rebar tying, right? Who would have thought like a robot, rebar, what? That study shows that it's cutting labor by 40% on structural phases alone, right? So that's a really big deal. I mean, if you go to iconbuild.com and check out some of their community projects on their website, like they've already got these communities completely full with people that initially couldn't afford a home in there and functioning, and now they own an asset. Like this is real impact being seen, maybe not at scale, real scale yet. Now let's go over to the other side of the coin. Operations running these assets. Figure AI. They're backed by Microsoft and OpenAI. And mainly they've been seen in like the manufacturing space and industries like, BMW factories is a good example, and like creating more efficiency in how the, cars are put together. Well, now they're moving into commercial facility management. Keenan Robotics has units doing room service, delivery inside the Hilton and Marriott properties. They've got digital robotic kiosks now for check-ins. They've got operational maintenance robotics now. They've got concierge. They've got people bringing your room service and your, luggage up to your room that are robot. I mean, like, this is a big deal when you think about some of the income generating opportunities and expense reduction savings that are going to be seen and felt in an industry that's been hit really hard with expenses and some of these issues like hospitality. Operators are reporting 25 to 35% reductions in labor costs. Goldman Sachs projects humanoid robots alone are going to hit $38 billion by 2035. Now, that might not seem and feel like a big number compared to like the trillions that we're hearing with SpaceX and OpenAI and Anthropic and, NVIDIA and all of those, right? But this is the early stages of the robotics industry. I mean, I'm talking infancy. And when you have institutional money like Goldman Sachs showing you where it's going, you know that they're the first of many that are going to be playing in this space. And to me, that's really exciting. So, as an investor, right? Like, let me make this real by asset class, go through this, and you can kind of see like the real impacts of how this is just going to scale over time. And this is just what we're seeing today. Okay. So, developers and build to rent investors, right? We've seen build to rent communities become a big thing in real estate. A 20 to 30% drop in hard construction costs means deals that were dead on arrival because they just don't financially pencil. Those are deals that actually can get built again, which is going to bring more supply and homes to the housing market, which obviously we significantly need more supply. Also, right, will alleviate some of the pressure on houses, which is going to make things a little bit more affordable. Those are big deals that, again, robotics are going to be kind of the lead domino that, creates that impact, right? The developers who pilot robotic construction first are, I think, in my opinion, going to be the ones that crush it. You got Lennar, right? They're a publicly traded company. If they're partnering with the icons of the world and they're finding ways to bring robotics into their entire business model, those could be companies long-term that could see a significant benefit, if anything, a moat are built around their business model. You got multifamily and hospitality operators, right? Labor was always our biggest issue when it comes to controlling our income and overall the value of our asset and our business. When I was running and operating all of my hotels up in Lake Tahoe, like labor was our biggest uncontrollable expense. And for many people that are in this space, multifamily, hospitality, right? It's been not only spiraling, but it's been spiking since COVID. And when you think about the math, right? How valuations are created and generated and protected in commercial real estate. Well, I'll give you an example. In a 200-room hotel, a 30% reduction in F&B labor adds $400,000 to $800,000 in annual net operating income. Now, net operating income divided by the cap rate gives you the value. Well, if you're able to drop your expenses by 30%, and drop that savings down to your net operating income, $400,000 to $800,000 in annual net operating income at a 7 cap, that is $5.7 to $11.4 million in added asset value. That's a game changer. I mean, truly a game changer from one technology decision, not a renovation and redoing the whole hotel, not some reposition, right? By adding in new technology that is going to become more and more readily available and accessible to investors, not just the big institutional giants, but over time that tech is going to fall and trickle down to the mom and pop investors like us, right? That can get real benefit from it. And it might feel and seem insignificant to you right now, but I'm telling you, like, this can be life-changing money over the course of 10, 15, 20, 30 years. Hey, what's up, guys? I'm so excited to announce if you are an investor looking to generate consistent passive income, then I've got something for you. I just launched the Imagos Income Fund. It is a private investment debt fund. So instead of relying on long-term appreciation or big exit events like most real estate syndications do, we decided to keep it simple. Focus on first position, asset-backed lending just like a bank, meaning your investment is backed by real collateral and structured to produce income from day one. The target return, 10% paid out annually and also paid out monthly. So no guesswork, real passive returns, true mailbox money. And because we're in the debt position, not equity, we're able to prioritize downside protection, maintain shorter durations, and stay in control of the risk, which is most important in environments like this. This is built for investors who want steady cash flow, strong capital preservation, and real asset exposure without the headaches of owning, managing, and waiting years for a payoff. So if this resonates with you, if you want to learn more, I put together a full investor presentation breaking everything down. All you got to do is just text the word income to 844-447-1555. That's income to 844-447-1555. I'll send you everything so you can see if it's a fit for your portfolio. So we've got industrial and commercial real estate investors that are also going to benefit from this. Prologis, you've probably heard that name. It's the world's largest industrial REIT at $180 billion in assets. They're already reporting that robotics-enabled facilities run 200 basis points above standard portfolio occupancy. So tenants are willing to pay a premium to be in buildings that are tech forward, that support their automation needs, right? The market is already pricing this in. And this is something that you got to pay attention to, right? Because where the smart money goes, it's only a matter of time until more and more people start to go, oh, wow, the noise is getting louder and louder around this stuff. These are real opportunities. So my view, and I think most people are, missing this a little bit right now. This is where I think the alpha, or maybe the opportunity is. In 2010, if you told a retail investor to go heavy on warehouses because Amazon was going to need them, they'd have laughed at you, right? Like, Amazon, the book company, what? Okay. By 2020, those people who decided to do that were sitting on some of the best performing asset classes in commercial real estate history. The signal was there, right? The window was open, but most people just missed it. They didn't see how this book company that was going online and was becoming a logistics company and a retail company was going to be in demand for all of these things that real estate investors could get a piece of that pie. And I think that robotics is another opportunity where us as real estate investors, or really just investors in general, if you're not going to invest directly in maybe assets, invest in the companies that are playing in these spaces. And we'll talk about that here in a second, at least some of the ones that I'm paying attention to. This is the stuff that can get you the real alpha and be that contrarian investor that sees some things and makes some asymmetric bets that other people are maybe missing or just not willing to make. So I'm not giving you financial advice. I'm just saying that these are things that I'm paying attention to, I'm excited about. Now, we're in that exact window right now, in my opinion, with robotics. Now, Goldman is running the numbers, right? And they're telling you this is where it's headed. You got Prologis has already seen the premium and live occupancy data. They're seeing the alpha that they're getting with their tenants and the demand that's resulting. Icon is breaking ground at record scale right now. These are things that aren't just theoretical. Like, these are things that are happening today. So just think about what it's going to look like in 6, 12, 18, 24 months with how quickly and exponentially fast and growing AI and robotics compounding together are going to accelerate these opportunities. So the question is whether you act while the window's open, right? Or at least start to pay attention and track some of these things. As Buffett said, the best investment is in a business with a durable competitive advantage. And operators, in my opinion, who build robotics into their assets are building exactly that. So thinking about how you can do it, when to do it, how it makes financial sense. These are the things and the problems that obviously we've got to solve. These are the things I'm trying to look into. I'm looking at doing some of this at some of my shopping center stuff, some of the office and medical office stuff that we've got, because these are the things that could attract these really high quality tenants or patrons to want to come frequent your center and to become kind of that's a part of your brand, right? And not only do you benefit from it from a business model and a brand strategy, but from an investment strategy and making more money. So before the watch list, the entire global robotics industry, let's just talk about the data real quick, kind of the market size. How early are we, I guess, is the question, right? Because there's a lot of people like, oh, this is going to be the greatest thing ever. And then, 18 years go by and it's maybe just starting to get a little bit of attention and traction. So let's just break it down. Let's talk about real fast, the market size. The entire global robotics industry sits at roughly 70 billion today. McKinsey projects that it's going to cross 260 billion by 2030. Some forecasts push past 500 billion by 2035 when you fold in maybe the software and some of the services and the infrastructure. But when you think about this, we are at 15 to 20% of where this market is going in under a decade. So for context, the entire robotics industry today is smaller than Home Depot's market cap. I'll say that one more time. The entire robotics industry as a whole today is smaller than Home Depot's market cap. The e-commerce investors who loaded up on warehouse REITs in 2010 look like geniuses in hindsight, right? The signal, now looking back, was very obvious to anyone paying attention. But this is, in my opinion, that signal right now where I'm going, man, like this really feels like it's a no-brainer. And in a decade, we're going to be looking back going, yeah, that makes total sense. And anybody that, was paying attention to this, you, Mr. and Mrs. Listener right now, are going to hopefully benefit from that if you decide to even just give yourself a little bit of exposure to it, right? So here's what you can do with this information. I'm kind of exploring and breaking this into, we'll call it 3 buckets, okay? So bucket number 1 is stuff that maybe you just want to even if it's buying a couple $100, buying 1,000 here and there, just to kind of I like to buy things because then and I'm not talking massive exposure. I'm just saying buy something small, make a small bet, a small investment, and you're just going to be forced to pay attention to it and kind of track and see where it goes. And the more in proximity you are to the things that you want to know more about or that you believe in or that you're interested in, the more you're going to learn and grow and gain an edge in those things, right? So some things that, you can buy today. And again, no financial advice here. This is just stuff that you could get access to right now that are in the robotics industry. Prologis, PLD ticker. They're the world's largest industrial REIT. They're already capturing the robotics occupancy premium, right? So this is a good, clean real estate narrative play. Now you've got East Group Properties. They're a Sunbelt industrial REIT, and they're big on automation. And they've got some good growth runway, like the PLD Prologis company does as well. You've got ABB Limited, one of the largest robotics manufacturers on earth. They've got deep exposure to warehouse and building automation across all industries, right? Not just real estate. You've got Rockwell Automation. They're an industrial automation infrastructure company. So as buildings, right, smart properties, smart buildings get smarter and smarter. As these buildings get smarter, Rockwell is kind of the guts, the backbone, I guess, the infrastructure of all of it. So they could benefit from that, right? You got Intuitive Surgical, the gold standard of deployed robotics at scale. The playbook they proved was really in surgery. And obviously, if you believe in anything in healthcare and efficiency there, right, they could be interesting to pay attention to. And then you got some ETFs, kind of a bag, right? Robo or bots, more of diversified exposure. So again, you don't have to necessarily focus on picking the individual winners. They're just going to kind of give you that bag, as Ryan would say. Also, liquid, accessible. So again, these are ones that you can buy today. Now, bucket 2, I would say, is some of the IPOs that are interesting. Figure AI, backed by, I got in with them. I'm excited about that one. That was an interesting little, and I just threw, I think 30 at that one. So I'm excited to see how that kind of plays out. Again, this was kind of my first exposure into the robotic space. So something that I wanted to kind of track and got me more into understanding and learning about this industry. They're backed by Microsoft, OpenAI, NVIDIA, and Bezos, and they're already in commercial deployments. They're kind of one of the most anticipated physical AI IPOs of at least this upcoming kind of tranche. You got Agility Robotics. Their Digit robot is being deployed by Amazon and Real fulfillment centers on real leases right now. So that's one to watch closely. I'm sure you've seen some of their videos of a real person trying to compete with the robotics in these, warehouses for FedEx and Amazon and Walmart and all that. I believe that is their company. We've also got Icon Technology, right? We just talked about them earlier. They're backed by Lennar and DARPA. They're probably the one, in my opinion, that is probably the most real estate relevant IPOs to take a look at. Keenan Robotics, we talked about them. They're in the hotel and multifamily delivery robotics, bringing stuff to you, from you, food, equipment. Yeah, I mean, you name it. They're expanding fast right now. So again, some interesting stuff. But again, I'm not your financial advisor. Do your homework, talk to your advisor. These are just some of the ones that I'm paying attention to. You decide what you want to do with that. So Bottom line, robotics are hitting real estate from both ends. The industry is at a $70 billion market cap today, headed to $260 billion by 2030. And according to what we said on Goldman Sachs, 2035, a very significant jump from there.
Here's the thing about most investors right now. They're consuming a ton of content, but they're not actually more informed. They're reading all the headlines, they're watching the tickers, they're following all the noise that mainstream media wants you to follow. And at the end of the day, you're still not informed on what it actually means for your deals, for your portfolio, or for your next move. So if you're listening to this right now, I don't think that's you. I think that you actually want to understand what's happening, how it impacts your investments, what you should be doing going forward, what you shouldn't be, and not just reading about it. That's why I decided to build the Wealth Intelligence Brief, a newsletter sent to you 3 times a week directly to your inbox where we cut through the noise. We send you the macro data, the real estate intel, crypto signals, and all the unfiltered takes in 5 minutes or less for free. Eliminate the noise, keep the edge. Sign up by texting the word WIB to 844-447-1555. That's WIB to 844-447-1555.
So the investors who win, in my opinion, aren't the ones with the most money. Yes, a lot of the times they are, but they're the ones who paid attention when the window was still open and wasn't obvious yet. So I'm curious on your thoughts. I'm paying attention to robotics. I got a few, bets that I'm making. I'm going to continue tracking this stuff. We'll keep breaking it down. I'm excited. I just want to implement some of this stuff into my life now, in my home, in my investment properties. And obviously, I think we're going to see more and more of this integrate itself into many different verticals of our life. If you enjoyed this, share this with an investor, share this with somebody that you think would enjoy today's episode. If you're not subscribed to the podcast yet, don't forget to subscribe. If you're enjoying these episodes, these breakdowns, the team and I would greatly appreciate if you leave us a 5-star review on whatever platform you enjoy listening to this content on. And don't forget to shoot us a text, 844-447-1555. Always love hearing and connecting with you guys. We're thinking of doing another Napa event here in the coming months. So for anybody that loves wine, loves food, loves events, and getting in close proximity to other investors like themselves, again, don't forget to text the word Napa. As always, appreciate you guys tuning in. Go build something. Go invest in something. Keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.
Well, that wraps up today's episode. Thank you so much for tuning in. As always, you guys know this show would not be what it is without you, the amazing listener, the support, sharing this out with other people who can gain value from it, taking 60 seconds to leave a review. If you haven't done so already, those things mean the world to us and ultimately help us spread this message out to as many people as we possibly can to help them on their wealth building journey. If you have any particular links or resources that you're trying to track down that were mentioned in this interview, be sure to check out this episode at millionairemindcast.com, where you can find access to all that information. And of course, if you haven't checked out the Wise Investor Vault yet, be sure to head over to wiseinvestorvault.com to check out all the tools, all the resources, the checklists, the spreadsheets, the trackers, all kinds of amazing things that can help you on your wealth building journey at the wiseinvestorvault.com. If you haven't connected with me on social media yet, I'm consistently putting out more content, stories, value to help you on your wealth building journey. And one of the best and most exciting things for me on a weekly basis is getting to connect with you guys. Getting your DMs, hearing what things impacted you, what you need help with is a big way that we continue to drive the content for this show. So if we're not connected and following each other on Instagram, on social media at official Matty A, give me a like and a follow. Would love to connect with you there. And of course, don't forget to get on my deals list. If you're an accredited investor, you want to look at more deal flow. You want to see what deals I have access to, what deals I'm raising capital for. This is an exclusive list that I only put out to my accredited investor list, my Millionaire Mindcast family. So text the word deals to 844-447-1555. And with that being said, thank you again so much for supporting the show. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.